All right, let's get into banking basics, everybody. Banking is a very important part of your financial picture. You know, I might be taking a leap here, but you probably have better things to do with your time than opening envelope bills, writing checks, balancing checkbooks, addressing and stamping the envelope, licking them, yuck, and taking all this stuff all the way to the post office or the mailbox, right? Now, the good news is that you don't have to mess with any of that stuff anymore. Welcome to the new age in banking, young people. And you're fortunate because being as young as you are, you have it very easy when it comes to banking. You can automate your finances, put it all on autopilot, have everything online, get email alerts. It's wonderful, it's easy, and it could, dare I say, be fun. Now, opening and maintaining the right bank accounts is really important to good money management, okay? The accounts you'll have at the bank or the credit union form the backbone or skeleton of your financial planning. You're going to need a checking account and a savings account. That's going to be the center of your financial structure, and your money is going to transfer from these accounts to pay expenses and fund your future investments. But of course, don't forget to deposit money too. Now, let's talk about where you're going to keep your money. There are banks, and as I mentioned, there are credit unions as well. You can save money at a bank and become what's called a depositor and earn interest, okay? Or at a bank, you can become a borrower, where you borrow money from a bank to get a car, to get a house, or to start a business. The bank will charge you interest for them to let you use their money, but they're going to also make sure that you qualify for the loan by checking you out. They're going to check your credit history, which we've talked about a little bit, and your income and all of that stuff. Now, the main difference between a bank and a credit union is ownership, okay? Banks respond to stockholders and investors that invest in the bank in order to earn an investment profit. We're going to discuss investing in a later lesson. Credit unions, on the other hand, are owned by its members, such as yourself if you participate in a credit union. So if you join a credit union that pays dividends, you would make a return on your money by being a member of that credit union. But keep in mind, not all credit unions pay dividends, okay? Now let's get into some pointers for choosing the right bank. Make sure the bank offers online banking, okay? It's definitely a must-have, and it's going to save you a ton of time later on. Not to mention, online banking can be an important part of protecting your credit, because this way you won't have late payments to places that you owe. Money gets through quickly, electronic transfers, and you'll always be on time, okay? Next thing you got to know the fees, please. The fees are very important, okay? Make sure you know all that stuff up front. Some banks charge to open an account. Some might charge an extra amount to receive paper statements through the mail, which I don't discourage. Not a bad idea to have paper records as well. And also, some banks charge for online banking or even checkbooks to have as well. So make sure you know that up front. Just because a bank charges for this stuff doesn't make it bad, but this goes into the whole budgeting aspect where you know what you're getting into before you get into it, okay? So make sure you know the cost before you sign up, okay? You're going to need to make a minimum deposit once you open a bank account, all right? And that is typical for most banks and almost all banks and credit unions, so just get used to that idea. The bank or credit union may place a hold on your funds at first, especially once you first sign up for an account, because they're just getting to know you. Once you prove that you're responsible with managing your accounts, they're eventually going to stop placing holds, and that may take a few months to happen until they really become familiar with you. So be prepared for that, okay? Now make sure your bank is convenient and that it's inexpensive when it comes to ATM usage, because you're going to need cash to go to the movies and buy popcorn and do all that fun stuff. Make sure that they have a broad enough coverage area in your local neighborhood and it doesn't cost you an arm and a leg to access your own cash. This is important. Of course, maintaining a positive relationship with your bank or credit union and them getting to know your track record, it's going to make things a lot better and favorable for you later on with their other programs when it comes to lending, borrowing for a business, investing, and all that good stuff, okay? So make sure you treat your relationship with your bank or credit union extremely respectfully and responsibly. It'll make a huge difference. Now, as far as using your accounts, you're going to keep your emergency fund, which I talked about in a previous segment, in a savings account, okay? We already covered that. That's where you put about 6 months of your monthly expenses away in that account. As far as your fund or your fund account, keep that separate from your long-term planning account, but make sure that you avoid paying additional for having multiple savings accounts. So again, know the costs up front. Keeping things separate like that, your fund separate from your emergency, from your long-term, that's going to make things have more purpose, more organization, and it really helps you to have a specific purpose for all the funds you're going to be having later on. Now, make sure that you link your savings and checking accounts to each other. This way you can have automatic transfers between, from your checking to your savings. That makes saving easy, and more importantly, it makes it automatic. This way you don't have to make the effort to put money away. It just automatically takes X amount from your checking right into your savings. Boom, automatic savings. All right. Now keep a close eye on your account balances. Know how much money you have actually in real time, and this can be done online. That's the great thing with online banking. You don't have to balance your checkbook like they did hundreds of years ago. Right, parents? But you still have to be responsible. Now you can pay bills online, transfer money, do a whole host of things online with your banking. But make sure that you never spend more than you have, because if your account goes negative, your bank will charge you a lot of penalty money. And that's no fun at all. So make sure you're on top of your balance. Every day you know exactly how much you have in your accounts. You need to review your bank statements carefully every month out of habit. That's why it's not such a bad idea to also get paper online statements, just so you can do that. Banks make mistakes too. Not often, but they do. So make sure that the transactions make sense and that you made all the transactions. One thing to stay extremely careful about is fraud. That's when people who steal get your account information and take your money without asking you. And that's what you need to be extremely careful about, not to share any information, including passwords, with anyone, and keep it all written down in a very, very safe place just in case you forget. If you store that information in your cell phone, make sure you always lock your cell phone and don't let any random people get into your cell phone. It can cost you a lot of money. If you ever suspect someone has your account information and they should not have it, call the bank immediately and report fraud. Finally, there's something called debit cards. Debit cards work like a plastic check. They're directly linked to your checking account, and any money you spend comes right out of that checking account. It happens instantly, where you're going to see the transaction on a debit card hit your account the same day, in many cases within the same hour. Okay? You can see how quickly, if you use online banking, which I encourage you to use, after you make a payment, after you buy lunch, go home, check online, and you'll see that payment within an hour or two. Now, that's different than a credit card. Debit cards are different than credit cards. With a credit card, the charge that you make to buy lunch or go to a movie gets placed on a bill that you are asked to pay later that month, and that usually happens on a monthly basis. We're going to get into credit a little bit later on. Another thing to watch out for is something called over the limit fees. Okay, so let's add that under fees. Over the limit fees. Okay, and this applies to debit cards. If you spend more than you have in your account, your checking account, let's say, be careful. Be mindful of your spending, because these fees will cost you a lot of money. Okay? So be very conscientious. There are companies that issue, finally, private debit cards. This is separate from banks, separate from credit unions, where you can deposit a certain amount, let's say $200 or $300 to get started. And then you would spend against that. So you fund it up front, then you spend against that. That's a great way to establish your credit early on in the game if you don't have any credit established yet. And another thing with that is that you can avoid these over the limit fees by using a private debit card. Okay? Make sure it's a reputable company that you're working with. And that's good practice basically before you start using a debit card, is using a private debit card to avoid those over the limit fees. Okay? Now, opening a checking and savings account, that's the first step toward building your financial foundation. Now, opening checking and savings accounts, that's the first step toward building your financial foundation. When you're choosing a bank, make sure that you pick a bank that fits your needs today, but that can also help you in the future. This way, once you plan to start a business, buy a home, or buy a car, or get an education, that bank can serve your future needs as well. See, as I said, building a good relationship with a solid, reputable bank has many benefits. Now let's get into the because you know this. You will avoid frustration that comes from being disorganized with your finances and not having specific purposes for your money. By getting your arms around the whole banking issue, which is inevitable, you're putting yourself in a position of control by establishing the basic tools of your financial planning. Later on, especially once you start investing, you're going to have more accounts. Things may get a little more complex, but properly managing your basic checking and savings account properly upfront, that's great practice, and it is necessary in order to advance and grow financially. Thank you.